Hello, I'm Peter Herbert and welcome to this month's CPD webinar, Top Tips for Pension Scheme Audits. Institute and ACTA inspection visits often focus on pension scheme audits, where these are done by firms, and reviewers are often critical of the same sort of things. What we'll do during today's short session is highlight some of the common problem areas and how to address them. Let's start off with some big picture stuff though. I would say that three very important imperatives before you begin any pension scheme audit are to, first of all, make sure that when planning the job, you do leave yourself enough time. Third-party service organisations take a lot of the strain out of pension scheme management for trustees these days, and that could be investment managers, that could be scheme administrators, but there is still audit work to do on the information they produce. Making sure you've got enough resource. I think pension scheme audits, although in theory reasonably straightforward, are actually in reality quite specialist. So having a specialist team within your firm dedicated to this work is no bad thing to make sure that you do ensure that the auditing standards have been properly addressed and complied with. And linked to the two above points, making sure that you are charging enough for the audit that you do. Again, given the amount of reliance placed on third-party service organisations, one might imagine that a pension scheme audit would be very easy to do, and therefore the fee quote could be very low. But in reality, that's not the case. So making sure that you don't underquote and therefore run the risk of cutting corners, I think, is also really important day to day. Okay, let's then run through these 5 top tips. First of all, I want to talk a little bit about the importance of understanding key controls and checking design and implementation. Linked to what I mentioned a minute ago, because so much reliance is placed on service organisations, the danger can be on the audit file to make no attempt to document, understand, evaluate, and get evidence of implementation of key controls. It is important to do that. So I always think, what are the key controls around contributions to make sure the right contribution income comes in from the sponsoring employer? What are the key controls around pension payments? And that could be controls around initial pensioner setup and in-year payments. And then from an investments point of view, what are the key controls around investment protection and making sure an adequate return is achieved for the benefit of the scheme members? Now, admittedly, a lot of those controls may well be controls that are applied within the service organisations on which the trustees rely, but some coverage on the file of what those controls look like and how you've got evidence of implementation, I would say is still really important. Don't forget as well that in any ISA audit, when you identify an area of significant risk, you've got to understand the controls that are implemented in that area of significant risk and get evidence of implementation. And we've seen a number of reviews recently of pension scheme audits where a critical risk has been identified, but no work has been done by the auditor to understand the related controls, if there are any, and then to assess the design and implementation of those controls, a standard requirement of ISA audit rules. Second top tip is to obtain investment reports direct from the investment manager. Now, when it comes to the sorts of reports that investment managers produce, there's an interesting conversation to be had around how you would actually test and evaluate that information. Many pension schemes will have a investment manager for which there will be a type 2 controls report that the auditor can hang their hat on. And even where there is, where investments is a material balance, which pension schemes it invariably will be, there will be some substantive work to do on the investment valuations based on the requirements of paragraph 18 of ISA 330. The point here, though, is more fundamental. Inspection reviews very often reveal that the investment manager report's been received from the trustees, or that it's not clear whether it's been received from the trustees or from the investment manager direct. It's better quality evidence where it's obtained direct from the investment manager. So to do that, and to make really clear on the file that that has been done, is always a big tick in the box as far as any file review in this area is concerned. A number of firms that do pension scheme audits will also use that particular dialogue with the investment manager to get confirmation that there are no liens or charges over investment assets held by the scheme managed on behalf of the scheme by the investment manager. Where there are charges over scheme assets, there are very important regulatory implications and implications from a disclosure point of view. So to use that dialogue with the investment manager to get confirmation of that, again, is a big tick in the box as far as the pension scheme audit is concerned. Tip 3, and a very topical one, is to understand the statement of investment principles and check compliance. Remember that any scheme with more than 100 members does need to have a statement of investment principles. I think currently, with a really big focus on green investments, this is giving rise to a number of schemes, many schemes, changing their investment strategy. And that might in turn mean the statement of investment principles is changing as well. And the statement will very often get referred to in the trustees report. So for any audit of a pension scheme, a very important step to take is to review the statement of investment principles, understand what's being said about it in the trustees report, and then make sure that what's actually happening does indeed align to the investment principles statement in terms of the way the investment strategy is actually working, which obviously will come to light from the work being done on the investments within the audit file. Where there's a deviation from the statement of investment principles, and that's really clear from the audit work you're doing, that could be problematical, or it might be that you take the view it's not a material deviation, in which case it might at least be appropriate to make reference to that deviation in the trustees' annual report. That was a big issue during the pandemic, where there was deviations going on for very particular reasons in relation to COVID. It's very much the case now as investment strategies evolve. And again, at the current time, with the green agenda really at the fore, a very important thing to focus on from an audit perspective. Some, but not all pension schemes will have buy-in annuities. And when the FRS 102 SORB came in back in 2015, buy-in annuities came on balance sheet or onto the statement of net assets for pension schemes for the first time. When you do have an annuity on the balance sheet or on the net asset statement, very important to make sure you're doing appropriate work in relation to the audit of it. And invariably what will be relevant here will be paragraph 8 of ISA 500 that deals with client-appointed experts. Now, when evaluating the work done of a client-appointed expert, in this case, an actuary, what is going to be important for the audit file is a comment on independence, a comment on qualifications, and a comment on the assumptions used to underpin the valuation, without in any way, shape, or form expecting that the auditor is going to become an expert on performing annuity valuations for the purpose of pension scheme accounts. What professional bodies will often focus on is not only the reputation of the firm for which the actuary works, but also the individual actuary concerned who's performed the valuation and what qualifications they've got to enable them to do it. So don't be afraid to do a deeper dive on that when evaluating annuity valuations for the purpose of the audit file. Finally, don't underestimate work on pension benefits. Whenever you're doing an ISA audit, paragraph 18 of ISA 330 says that you will need to do some substantive work on all material classes of transaction and balances. Now, very often when it comes to pension benefits, the actual administration of those is outsourced to an administration company. And a type 2 controls report giving reassurance that the administration company are on their game and doing things appropriately is really good from an audit evidence point of view. But some substantive work will also be needed, as well as that controls report that reinforces that the administration company are doing things well. So don't forget that substantive work. Sometimes the substantive work can be quite broad brush, too broad brush, in terms of rationalising year-on-year pension increases by reference to inflation rates and the like. That's where, if you are doing good work at the planning stage, to do walkthroughs in relation to new pensioner setups and in-year payments to make sure the right measures are being introduced to ensure the correct payments are being made. That means that when you're doing that analytical work as part of your substantive testing, you're going to be in a good place. Also, still a hot topic as far as regulators are concerned is existence testing, pensioner existence testing. Now, very often what firms will do is they will rely on the controls that schemes have got and the controls that scheme administrators have got to ensure that pensioners do indeed still exist, are indeed still alive. That's all well and good, but do ensure you've got evidence of those controls in place on the file, and that then covers off that particular point from an audit evidence perspective. Okay, so that's 5 top tips on pension scheme audits. Do join me for the 2 more in-depth courses I'm running as part of our spring program. So on the 31st of March, it's the Introduction to Pension Scheme Accounts and Audits. And on the April the 20th, it's the Pension Scheme Accountant Audit Update. More information on both those courses at www.insight-training.co.uk. Hope that was useful. Thanks for listening. See you all soon.